everyone. Joshua Hayes at BigWaveTrading.com. Friday was a good session overall for the market. Overall, happy with what happened on Friday and overall this week. But let's be very, very clear about something here. We're in the middle of summer. We're in a range-bound, choppy market. We are in a midterm election year. August and September are right around the corner. Historically, seasonally, since 1950, the worst 2 months of the year. So we're going full steam into that. On top of that, if we look at the relative strength lines in the market, SPY is irrelevant. But what do we want to see lead? The QQQ, because this is where all the hot stocks are. So we want a relative strength line that looks like this. Do we have that right now in the QQQ? No. I see a series of lower highs, lower lows, downtrending below the 21 EMA. How about the more non-tech focused NASDAQ? Same thing. Series of lower highs, lower lows, stair stepping down below the 21 EMA, even have red bop on this chart. Then we look at our more speculative names, IWM. Are they still leading? No. The relative strength line is below the 21 EMA. The 21 EMA is rolling over. Well, how about our defensive names like the Dow Jones? No. It's the relative strength line is now below the 21 EMA. RSP, nope. Relative strength line is below the 21 EMA. So if we're looking for complete alignment, we don't have it. With all those relative strength lines below the 21 EMA and all moving down, then obviously the SPY, S&P 500, is the index that is really taking the leadership short term. So then I have to default to what has been very reliable ever since we created it and have looked at it. Whenever on the daily time frame, this thing is stair stepping higher. And whenever you have that combined with the hourly time frame stair stepping higher, great things can happen. Now, in this market, the QQQ diverged from everything else, and it was basically AI, data centers, semiconductor related names. But just to let you know, in other markets, you have complete alignment where the QQQ is stair stepping high on the daily and the hourly is stair stepping higher. Now, notice here this year, when we cross back above the zero line in the S&P 500, if you look at the hourly time frame and look at the crosshairs, that's exactly when we started to stair step lower on the hourly. So we just can't get that perfect alignment. We haven't really had that perfect alignment. We had it throughout 2023, 2024, and early to mid 2025. Episodic pivot events, earnings, EP events, catalyst events, big time catalyst events, setups, nice chart patterns. We could then use that leverage to go, I could at least, to 2x products. Like instead of buying Dell, I could do DLLL. Instead of buying ARM, I could do ARMG. This year, I just don't have that proper alignment. So right now, the S&P 500 is range bound, but on the daily time frame, while we are flattening out, we are not stair stepping higher. So it's not in a perfect alignment. Now, at least the hourly is above the zero line on the SPY or the SPX, S&P 500. But is there real power behind it, or is it just meandering? It's just meandering. And then if we want to get granular and look at the 15-minute, which is the lowest time frame I go on these indices, you can see that since this high here, while we're moving up in price, we're moving lower, so we're losing momentum on the 15-minute time frame. But ultimately, what leads us? The weekly time frame. And if we go look at a weekly chart, let's just do a 3-year weekly chart. We're well above the key moving averages, and we're stair stepping higher. So overall, no need to fight this, no need to short this, but expectations should be properly aligned for what we have overall in the market. So I'm not going to shy away from getting long quality names, grade A quality merchandise like SanDisk. If they can do a grade A chart pattern with a grade A catalyst event or episodic pivot event, I have no problem taking size. But until I get everything lined up, I'm still ticky-tack, pussyfooting around in the market in leading names. Now, for instance, I might have 3 new long positions today. They still all have to trigger and fill. If none trigger and fill, I'll have none. If all three do, then I'll have three. If only one does, then I just have one. So everything still needs to trigger and fill. So while it might seem like, oh my goodness, that's a lot of long positions on such a quiet day, they still have to trigger. I'm still modulating my size according to the overall market environment that we have, what we're heading into, what I expect. And I'm basically risking my total account capital based on that. So, am I doing 1R or 2R, which would mean 1% of my total account risk per trade, 2% of my total account capital at risk per trade? Or am I going all in with all available buying power? And then whatever R happens to be at risk, I'm letting it be at risk because the setup, the stock, the catalyst event is all just chef's kiss? No. So what I'm doing is using wide stops, rational, logical wide stops, and I'm only risking for right now 0.5R max per trade. So I don't have as much size as I want to have in the names that I like, but I'm just not getting everything lined up. And to me, it's variables in an equation. It's ingredients in a cake. You leave out some ingredients when you make a cake, your cake isn't going to taste as delicious. You leave out some variables in a key equation, the equation isn't going to work. So, with that being said, this evening, what did I find that I liked? Well, I've been talking about a few stocks. I already own one. I already have a buy stop on the books, currently paused due to the way the stock traded, and I have a new long position that I've been stalking for a very long time. But before I get there, I just want everybody to notice restaurant stocks, World Cup fever, they just look so good. BJRI, always have a tough time saying that, Cheesecake Factory, Brinkers, and just AMKR, I forgot. No, that's not right. Oh, who cares? Who cares? I'm not even going to try to even remember it because I'm just going off memory. I don't have any notes or anything here. So there's a lot of good looking charts in this name. I'm actually long two of the stocks, CBRL, following its episodic pivot turnaround earnings event. Episodic pivot slash catalyst, use whatever term you want. A real EP to me is BLZE. Now, BLZE sadly did not give me a delayed entry, but had you just bought it blindly over the closing price, you're up 52% in that name. Two other real EP events this year were FSLY and AAOI, also based off earnings. So those are real EP events, only three this year. So what I call an EP event, I'm just basically calling any minor catalyst event or major catalyst event an EP event. So restaurants are looking good. Other stocks of interest, I like that NVIDIA is curling. I also noticed CBRS IPO is curling off the lows. And there was one catalyst event today. WD-40's earnings, the the beating of the beating of the estimates this quarter was mind-boggling to me for a stock that's as big as it is. It was, I think, a $4 billion company market cap before the day started. I understand why, but that's its heaviest volume in at least the past 5 years. I'll be watching this one for potential delayed entry. I don't like how it traded today, but look at the relative strength line at the bottom of the screen, okay? And it has strong balance of power, low volume during that consolidation before this earnings beat. I'd entertain it if it happens to set up. But is WD-40 going to give you a SanDisk type move? Absolutely not. So understand the difference between WD-40 and SanDisk is night and day. And I would always have my expectations properly aligned, depending on which stock I go long. So this evening, I have 0 end of day sell signals, and I have 3 quality ideas. The first one I'm going to give everybody is BlackBerry. I love this stock ever since April. The volume, the balance of power, the relative strength line, the story, it's all there. Now, I finally have low volume on this pullback. Since it's getting close to the 21 EMA, I'm going to go ahead and do a buy stop above this high right here. So I'm going to have a buy stop above 1166 at 1167. And I'm not calculating my size and risking just the 21 EMA, which I would 100% do if we were fully aligned. I've given you all the reasons why we're not. So I'm going to calculate my 0.5R total account capital risk and size to the gap up low following this session right here. So BlackBerry is my first idea. The next idea is actually Peng. Now, Peng, unfortunately, whenever it had its HV1 back here, I thought it was too far. When I got this hammer candle right here, I was considering a buy stop above 50.02. I'm an idiot. I thought it was too far away from the 21 EMA. Peng has just laughed at my face. The base was very volatile here. And because if you look at an arithmetic chart, you'll see how volatile it was. So I couldn't personally do a trade before earnings. They had earnings and it went very, very well. Unfortunately for me, this is a hard stock to buy with that kind of pattern in this kind of environment. That being said, look at the BOP, look at the relative strength line, look at the volume. It's all there. So I went ahead and did a buy stop over 80.01, less than a 1% limit offset. I think, or actually a little bit over. 81 was my limit offset. It did not fill that day, even though you see 80.96 is the low of the day. It did not fill my limit offset. So I paused the order. Well, following today's session with today's hammer candle, I'm going to go ahead and call the order back on, but my buy stop will be 81.35, and I'm going to calculate my 0.5R risk to the low in this consolidation, which is right there. I forgot what it is. It's like 56.60. I would like a better entry off the 21 EMA, like I'm about to show you in MEI. So I'm already long MEI from this session right here, a very wide hammer candle off the 21, buy stop at 1572, triggered me in on this day. I now have, yesterday I should say, I now have a better, tighter hammer candle off the 21 EMA. If PENG gives me this MEI setup, I would do a 1R risk unit on that because PENG currently has a 94 composite rating. Its industry group is number 3. By the way, BlackBerry is 95 with an industry group rank of 5. So 95.5 name. Peng is 94.3. MEI is good. Its industry group is number 6 overall, but it only has a 70 composite rating. So that's the difference. But MEI is an earnings winner. BB is an earnings winner. Peng is an earnings winner. Peng's hammer is not on the 21 EMA. MEI is off the 21 EMA. Now with this one, I'm going to risk 0.5R of my total account capital above. I'm going to get it long at 1585. I'll do a limit offset at 16, and I'll be calculating my 0.5R risk to 1375. This low right here. So I basically want this one to work immediately, or I'll be starting to cut my losses. The only way the full 0.5R will be at a loss is if it triggers, fills, and then immediately intraday fails and runs at stop. If it doesn't, and let's say it triggers and fills and the low a day is at 1580, well, my first stop would be 1579. My second stop would be this low, minus 1 cent. And then my final stop would be right there. All right, everyone, have a wonderful rest of your weekend.